Hello, and welcome to the Without the Bank podcast, where you and I are going to talk about all things IBC, the business of banking, utilizing your money correctly, and how this will help you grow your business and your wealth. All right, folks, let's get into it. I have had a lot of conversations recently about, do I own the policy? Who's the beneficiary? If I own a policy on somebody else's life, how does that all work? And so I thought, you know what? Might be a good podcast topic to clarify how all of this is working. So if you can own a policy on somebody else's life, and I am sure I've already done a podcast about this, but I'll just clarify going in. If this is your first podcast you're listening to, you can own a policy on somebody else's life. Example, you have a business partner. You are financially tied. If that person passes away, you have financial responsibilities, so you can own a policy on their life. That person has to go through a health exam. They have to sign off on paperwork. There is stuff that needs to be, they have to give us their financials. So you have to let them know you're getting a policy on them. You can't just buy a policy on people without them knowing. That's not possible. And you have to have some sort of financial loss to do that, which is called insurable interest, right? There has to be something there or a reason why we're insuring them. You can't just go pull Joe Blow off the street and insure him, okay? There has to be a reason. So I recently had a couple of clients that one of them I said, well, you have a business partner. You should have insurance on the business partner. And he said, yep, okay, I need 2 policies on myself and 1 on her. I said, well, why do you need 2 policies on yourself? Well, for the business. I said, no, you don't need 2 policies on yourself. You just need 1. Well, yeah, I need 2 policies on myself because I need 1 for my spouse. And then I need 1 because if I die, then my business partner has to buy out my spouse. Yes, you're dead. So you don't need a business policy on you. Your business partner needs a policy on you, and you need a policy on her. So when she passes away, you have the money to buy out her spouse. She needs one on you, so when you pass away, you can buy out her spouse, right? She needs one on you, so when you pass away, she can buy out your spouse. Oh my gosh, I'm confused already. So we need one. We need to own it on the other person, okay? Who pays for that? That is paid for by the business. If you want to own it personally, then the business will most likely do a distribution to each one of the owners, and then the owners can take that money, pay the premium, and own it personally. Now, if the business were to own that policy, it is part of an asset of the business. I had an accountant tell me this, and I did not know this. So this is good information. If the business owns it, and there is a buyout, we have to buy out that life insurance policy as well because it's an asset. So if we're sticking a lot of money there, we may want to own them personally. So if there's a split, we never have to buy that life insurance, that portion of the asset. If the business owns it, the business also then gets to take the loan. That loan has to be signed off by all partners of the business. You can't just have one person borrowing and another person not knowing. If you own it personally, you can use it for whatever you want. You could actually lend the money back to the business, and then the business is going to be using that money, and you can charge the business an interest rate for that. Then I had another client that they're using it as an estate plan. And so they're saying, okay, we're giving land to the kids, but the off the farm children, which is just one child in this scenario, the off the farm kid isn't going to have anything. We want her to pay for the policy, own the policy, and be a beneficiary. She needs to pay for the policy? No, mom and dad need to pay for the policy. She should be the beneficiary, but as long as mom and dad are living, they can decide, do they want her to be a part owner? Do they want her to be owner so she can access the cash value while mom and dad are still alive? But the policy is on mom and dad's life. So because the other kids got land, they want to make it fair and they want her to have death benefit on them, right? Well, great. So now she can have access to the cash. They can either lend that to her or they can make her the owner, a co-owner, so that she can access that cash. But mom and dad are going to be paying the premium to give her her said share. And so this can get very confusing when we have so many policies. Now, it can get more confusing if we have a partnership and we have 3 owners, right? Then what do? How do we do it then? Well, then you might want 2 people to co-own a policy on the third, or you have 2 individuals owning a policy on one person, and that just goes all the way around, right? So if I was in business with Joe and Susie, Joe would have a policy on me and Susie would have a policy on me. Or Joe and Susie could co-own that policy on me. But then they would have to share cash value. They would have to share death benefit. It would limit what they could do. And it wouldn't matter if they were married, right? Because if they're married, it's all the same household. Unless they get divorced. Then all of a sudden we start fighting about stuff. But when we have more than 2, when we have multiple owners, 3 or more, that can also get a little bit goofy. Now, a lot of people with 3 or more will say, we just want the business to own it. Okay, but as that accountant told me, then we're having to buy it out. Lots of people who have businesses together, we don't want to take the distribution. Well, if you're an S Corp, from my understanding, it doesn't matter if you take it out or not. It's still income earned and you're still paying taxes on it. So why not move it over to you personally as a distribution, which is a lower tax bracket, move it over to you as distribution, pay that premium, then have that money to lend it back to the company so that they can use it. Or have that money to leave it for that child who wants to use that money while you're alive. And so there can be a lot of moving parts. The biggest thing is we don't need to own a policy on ourselves to buy out somebody else if we die. Okay? Because we're dead. The partner is going to be buying our spouse out. The partner is the one that needs that death benefit. Another thing is this is not some get rich, when you die, I'm going to get rich thing. This is, hey, we built this company together. We want to make sure that this company survives. And so that means death benefit is going to be available so I can buy out your family. We don't have to figure things out when you're gone. We know immediately that we've got the money to do that. Making it easier for your family to have this transition than, we have to go to the bank, we have to evaluate the business. Can we make this transaction faster and smoother by having life insurance on each person, knowing they've got the money, my family will be done with them as soon as they can? Because let's be honest, if we are in business with our friend, we probably don't want to be in business with their spouse. A lot of times we're getting along with our business owner, but we don't maybe love the spouses. And I've ran into that a lot where I have clients who have businesses with people, but they do not get along with the spouses. They don't like the spouses. The spouses know that they stay away from the business because they have raised havoc. And so it's kind of like in-laws. Typically the family gets along just great, but then the in-laws show up and all hell breaks loose. And so we have to look at the long term of that. It's not to get rich. Nobody's going to get rich, sorry to say. But it is to make sure that your family's okay. Trying to think if there's anything else on that would be important. There is. If you own the policy, so let's say again, I'm in business with Joe and Susie. Joe owns a policy on me and Joe dies. Now who owns the policy on me? The contingent owner. So there is always a contingent owner on these policies, and there is always a contingent beneficiary. So if Joe passes away, his wife most likely would be the contingent owner. Okay? If it's the business, the contingent owner is going to be the other business partners. What if Joe and I are on a business trip together and we both die? Then there's going to be a contingent beneficiary. If Joe dies, I was the beneficiary, right? Because I have a policy on Joe. So now Joe died and I died. So I'm the beneficiary on his policy because I own one on him, but now we both died. Now who gets his death benefit? You're going to want to list a contingent beneficiary, which then I would list my spouse. So if I die, he still gets the money, even though because I died, I can't have the money. So if you have policies that you own on other people and you don't have a contingent owner listed, if you don't have a contingent beneficiary listed, you need to do that ASAP. We have a client that I lost and we did not have a contingent owner on a policy. That was icky. I did not like having to deal with it. All went well, but I did not like having to deal with that. That should have been done right away, and that was our fault. We did not do that right away. That is not the story going forward. Those are fixed. We've gone through all of our policies, which there was a lot of them, and everybody has their contingent owners, their contingent beneficiaries. If you are a husband and a wife, and let's say that my policy goes to my husband, obviously, right? But what if we pass away together? We need to have a contingent beneficiary, and it should not be a minor. It should be a trust. It should be somebody that's going to take care of the kids, or a different family member that gives the person that's going to take care of the kids money. So there should always be a contingent beneficiary no matter what. Contingent ownership isn't always necessary, only when we have partnerships and those sort of things. Or like in my example, I have a policy on my husband. I own those policies because he doesn't do anything with the finances. So I own his policy. So if I die, he needs to be the contingent owner because he's still living, obviously. So it kind of gets to be a tangled web, but it really is, what are we doing with the policy? What does the end result look like? Who's all involved? Owners and beneficiaries can be changed at any time. So that can constantly be updated. Little bit of paperwork, no big deal, no questions asked, changed. So make sure if you have partnerships and you're doing that you have the right people insured with the right policies. If you have questions on that, just email me, maryjo@withoutthebank.com. I'm happy to answer that. If you have not gotten the book, Life Without the Bank, please do that. And you can go to withoutthebank.com and grab that. You can also grab Nelson's book, Becoming Your Own Banker. Let me know if you guys need anything. Hope that cleared up some questions. You have a great day, and we'll see you in the next podcast.